Kitco Mining's special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.
Gold hit an all-time high, so how come the miners are trending down? I'm with Jeff Clark. He is with the Gold Advisor. Jeff, welcome to Kitco.
Great, thanks for having me back, Michael.
We're going to talk about gold in a minute, but first let's just set the stage right now and talk about the macro environment. So in 2023, we had all of the Fed ratcheting up. We seem to have stopped that phase right now. What are you looking for in terms of the macro backdrop in 2024, and how is that going to filter down to resources?
There are many catalysts for gold, but in the short term, the major catalyst is going to be the Fed and the fact that the Fed is easing or reversing. So, Michael, I looked back at all of the other easing periods since the 1970s when the Fed was lowering rates or keeping rates low, not raising them, when they were dovish. There were 11 of those periods, and in 11 of those, gold rose in 9 of them. So gold likes easing. And John Hathaway just put out a report recently that showed what gold stocks did during the last 3 periods of Fed easing. And gold stocks rose as a group, not 10 or 20%, but 200, 300, even 400% during periods of easing. That is our short-term catalyst for gold. I think that is obviously very supportive for gold, and I think that does push us to new all-time highs.
As noted, I mean, we still see that the gold miners are almost down 10% year to date as in terms of GDX. You would think that the market would be more forward-looking right now, or kind of expect that. So we're just kind of seeing a lull, or we're just expecting that this is actually going to happen.
I think the catalyst for that, for a shift in sentiment, that's what it's going to take. We're going to have a shift in sentiment in the junior miners. And what that's going to mean, what that's going to require, is going to be not just gold peaking up into a new all-time high, but making a decisive move up to 2100, 2200, 2300, whatever it might be, and staying there. In other words, a sustainable breakthrough to new all-time highs, whatever the reason might be. But once that happens, I think that ushers in the beginning of a shift in sentiment in the junior mining sector. And when the mainstream investors come back, given how far sold off we are, the returns could be quite spectacular, frankly.
Well, you talked about the junior space, but there's a whole universe within the gold sector space. There's the seniors, there's the mid producers, there's the royalty companies, there's physical, there's ETF as well, and the juniors. Is there any of these types of sectors that are going to be moving first or moving in some type of order when we suddenly see this happen?
Yeah, traditionally, gold and the metals are going to move first, and then it'll go down to the producers, then the mid-tiers, and then on down to the juniors. Silver will follow at some point, so we're traditionally lags gold like we've seen many times historically, so I think it'll lag. It'll play catch-up, though, and even surpass gold in terms of a percentage return. But once gold goes to 21, 22, 23, I think the clock has started. The countdown clock is on for when silver's going to make its move. It won't be right away. Historically, it's not been right away. So you can look out 6 months, and that might be when silver begins to make its move.
We're going to get into some of your specific ideas at the end of the interview, but let's also talk about the types of juniors that are potentially able to make a move in this space, because we've had this rough 2023. It's been very hard to raise money. We did just recently had on Kai Hoffman talking about financial flows, and actually 2023 wasn't that bad, but it was a very bifurcated market in terms of the people that were receiving. But we can see a preponderance of people were just having a hard time raising cash. Anything that you should be aware of in terms of when you're looking out there in terms of, like, I don't know how much funds they've raised, management, what would be generally you pay attention to or stay away from?
It is, I agree with Kai 100%. It has been very bifurcated.
Yeah.
The main things are the 2 C's, cash and catalyst. And so if a company doesn't have cash, if they can't raise, if they're not able to raise for any reason, they don't have a significant amount of cash to advance their projects, those are ones that are going to continue to struggle. And then, of course, they have to have catalysts. They have to have projects that they can't actually advance that can be improved in a materially or meaningful way. If they don't have those 2 things, we have some that have that and we have some that don't have that. And obviously we want to focus on the ones that do. But that's what I'm looking for, is the companies that have the two C's.
Are we seeing a push towards consolidation right now? So we now have Newmont was able to swallow Newcrest. We've also seen some more deals. So is this an environment that's going to be pushing more mergers and acquisitions in the space and kind of see some consolidation that people have always been asking for in the gold sector?
I absolutely think we're seeing that. We're seeing it behind the scenes now, in my opinion. One example is John Hathaway just pointed out that in the buyout of Callinex there of Marathon, there were 20 counterparties also interested in that asset. So that shows you there's a lot of interest there. The same with Hercules Silver. Barrick was able to swoop in there with a big checkbook, but other parties were also interested. Other mid-tier and major producers are also trying to bid on that. So it's already kind of happening behind the scenes. I think once sentiment does begin to shift a little bit, we're going to see a rush in M&A.
Now, Jeff Clark, I know you are the gold advisor, but if you don't mind, if we could just stray a little bit as well, too.
Sure.
Maybe if you could talk about some of the other commodities and first, and the one that I think that everybody's anticipating the most, and that's been copper. What do you see in the copper market?
I was hesitant on copper for a while because I thought we were going to have a recession. The yield curve said we were going to have a recession, but now, who knows? But I think there could be a soft landing, which means copper could take off, along with the equities. Same with lithium. The lithium price has crashed, but again, as investors, we're focused on companies and how they can move those projects forward. I think silver will be included in this at some point, just not right away, but I definitely want to have silver and silver equity exposure. So I think those are the ones I'm focused on for now.
Any thoughts on uranium? Now we're at the Vancouver Resource Investment Conference, and I know the high capacity or the most popular workshops have been uranium, and uranium, of course, has just been on a tear in 2023.
It's been red hot, and it'll continue that way probably for a while. I think a lot of companies are doing very well, and of course the uranium price helps that. The issue with Russia, the supply-demand fundamentals. There's a lot of reasons to continue to be bullish on uranium. Just one caution, if you're not already long, just don't chase them, let's ride the wave. That's what we want to do.
Lastly, let's talk about some of your top ideas. What do you think actually works in the space right now, Jeff?
I really am focused on gold. I have a lot of uranium exposure, some copper, some lithium, but I think what's going to move first of that group is probably going to be some gold and the gold stocks. And so I'm focused on those two. One in particular right now that's new here, that's in our brand new newsletter, is called Emperor Metals. I really like them. I like CEO John Flory, who was buying shares in the company, by the way, as an investment before he was even a part of the company because he liked it so much. So that's one I think has a very good chance of succeeding. And then the other one would be a lithium company, Argentina Lithium and Energy, they're called. I really like them. Stellantis, a major auto manufacturer, just spent 90 million Argentine pesos buying into this little tiny lithium explorer. They're not even in production. What are they doing? Why'd they do that? Well, because they need the lithium, and they think they're going to get it from this little company. Those two stocks are dirt cheap right now. Those are major buys for me.
Jeff, thanks for your time.
Great. Thank you for having me back, Michael.
My name is Michael McRae here at the Vancouver Resource Investment Conference on behalf of Kitco Mining.
Kitco Mining special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.